It's said to be the biggest merger in Indian corporate history, and it's happening right in front of our eyes. HDFC Bank merged with its parent house and finance company on Monday. So, what does this mean to us? What does it mean to HDFC customers, shareholders, and investors? We have with us a personal finance expert and someone who watches developments in domestic and international financial markets very keenly, Mr. Muralidhar Swaminathan, to break it down for us. Hi, Mr. Swaminathan. Welcome to the Federal.
Thank you. Thank you so much for having me on this show.
So let me begin by asking broadly, what does it mean when we say that HDFC has merged with HDFC Bank or the other way around? Should an account holder with the HDFC Bank be concerned about this merger?
Okay, let me start by saying that, look, this merger is absolutely inevitable. It should have happened 10 years back. It could have happened 5 years back, but it's happened now. Now, to answer the most important part from customer's point of view, I don't think any customer needs to worry whether the customer is a borrower, depositor, just account holder. Either way, in either of the institutions, they don't have to worry. That transition will be very, very smooth.
I mean, they're saying that the combined entity is now strong enough to counter competition, and is if competition is what the factor is here, then is it because the competition is getting fiercer that we are seeing this merger happen right now, and also, do you think that now that HDFC has merged, competition will also be looking at merging? Are we going to see some sort of a merger spree happen after this?
Okay, let me address this in two parts. The first part is why this merger. As I said earlier, it's inevitable. It should have happened 10 years back. It could have happened 5 years back, but it did not, for obvious reasons. What are these obvious reasons? The two institutions, both HDFC Bank, the parent and the child, both are very strong players. They are very big players, and we all know about that. Now, in both the cases, the merger has been delayed for a very long time. In the case of HDFC, the parent, they are borrowing at a higher cost and lending and trying to compete in the rest of the market. Now, over the last 8 to 10 years, banks, big banks like SBI, ICICI Bank, they are all aggressively pushing home loans. And then there are also smaller players. So a bank typically has a cost advantage because the cost for a bank is much lower than the cost for an NBFC or a standalone finance company. HDFC in those days was, there is a legacy issue, but that needed to be corrected. Now that was not corrected because the two were so powerful and the leadership on both sides. Okay, now this is something many people may not like when I say this. The leadership on both sides were worried about who will lose the power. Okay, if you merge one with the other, then look, if you are heading the bank and I am heading this side of the institution, after merger, what happens? Will I be more powerful than you, or will you be more powerful than me? Now that question, not outspoken though, has been doing the rounds in hush-hush media circles, which of course did not come out so evidently, but now it's come out. The reason being, all the key leaders, the promoters, those who built the two institutions, some of them have retired, some of them are retiring. In fact, one of them is going to retire in about a year and a half. And that's paved the way for this merger. So very clearly, you can't not merge. So the timing is very, very critical. Maybe it's good. Maybe it's not. I'm not going into the merits and I'm not judging. I'm only talking about the timing part. I'm not blaming anybody here. So the two will clearly merge. Now the succession issue will be addressed in both the cases. HDFC Bank has to merge. Now that is the timing part of it. Now the more important question that you asked me is about was about competition. Competition is severe. There are two parts to competition. One is the housing finance competition. The other is the banking competition. There are many small players emerging on the banking side. There are very small players who are coming in, taking a niche market, giving good service to customers and handling the services through technology. And then the behemoths are there, the HDFC Bank, the SBIs and the others. Now that's So the competition, when competition comes into play, they keep on eating a little bit here and there. On the housing front also, the competition is coming from two sides, coming from large banks and also small, non-bank finance institutions. Today, housing loan can be arranged by anybody with technology. All I need to do is to take money from you and give it to somebody. I just have to make sure that the technology connects. Tomorrow, I won't be surprised if technology takes care of everything through digital platform and says that, look, I can source money at 5.5% or 6% or 7% or whatever the case may be. I'll add a little bit of margin because my operational cost is not much, because I am 100% digital and I have all the data. I will pass it on to you at a very competitive rate. I don't have branches, I don't have to visit anything. All I need is that this due diligence. Today, your credit score is available very easily to most institutions. So technology has changed, the customer profile has changed, and the old fashion of looking at things are also changing. This I am assuming all the legal part of documentation and all, in terms of verifying the legal authenticity of a property, etc., is taken care. That in any case will be done, and it can be done online. It doesn't have to be physically present. In any case, if I send the document to your office, you are going to get it there and you will verify online, right? So technology, small players, big players, cost of funds, if we put all this together, HDFC can no longer function as a non-banking finance company. Now, on both sides, HDFC Bank is raising costs at a very, very low price. It must be somewhere around 4.5, or even less, because a bank has the advantage of what we call as CASA, current account and small account, savings bank account. Now that neutralizes the cost, zero cost on one side and whatever little cost that you have. But an NBFC has to borrow from the market because they can't raise the kind of deposits that the others can. HDFC, of course, mobilizes deposits, but they don't have current accounts, so they don't have zero cost deposit, whereas banks have zero cost deposit. Now, that being the case, why should I, being part of the same family, one person is lending at a higher cost, the other person is raising money at a lower cost? So the idea of getting together, if you don't do this today, tomorrow some other big bank will come and they will eat into your thing. So competitive pressure, succession, which means many seniors have retired, and therefore the merger at this point in time.
That's very interesting, because that also brings us to the next question. So, which is, like you mentioned about large players. HDFC yesterday in the press conference did say that, a larger balance sheet and larger capital base will allow a greater flow of credit into the economy. So somewhere these kind of statements and what you just said, does it show that, the ecosystem is supporting only larger players?
No, not necessarily. See, India is a very large country. There can be small banks which are successful as long as they lend and borrow prudently. See, large banks have also failed. I mean, there are many public sector banks which are large banks. They've not been lending prudently. They've failed. There are many small banks who have succeeded. You can take Federal Bank, for instance, or City Union Bank, in Tamil Nadu is one of the best run banks so far. Okay. So they control what should a bank do? A bank should ensure that they lend it to a borrower who returns the money on time, right? It's as simple as that. Whether you're big or small doesn't matter. So your prudent lending, identifying markets which can give you incremental growth, because if I keep collecting deposit and I can't lend, then I will go down the drain, right? So small or big does not matter. But in so far as supporting the economy through additional strength and all these things are, I would call macroeconomic statement. They don't matter. You could have serviced both sides. Here, the pressure was there because of competition. Therefore, I have merged. As a result, the combined strength will be very large. But remember, you are still, number two compared to SBI. SBI is still the largest. HDFC Bank on its own was the second largest, but even after this merger, I think there would be a gap of about 5 to 7 lakh crore between SBI and this fellow. So now the question is, how do you grow from there? We have very, very prudent in their lending. One of the key to their success is they're conservative, they're prudent in their lending, but they are not aggressive in lending to anybody and everybody. Okay, if that continues, then you will be able to service more customers.
All right. So they're also talking about how mortgage offerings will now become even more competitive apart from the banking aspects. So what does this mean to the customers?
Yeah, absolutely. See, the cost of funds goes down, right? That's the first important thing. When I merge the cost of fund, initially there will be adjustment that will be required because statutory requirements have to be met, RBI regulations have to be met, I have to do this, I have to do that, I'll have to adjust. So let's assume that the merger is smooth and it goes through in about a year and a half or so. And post that, I'm on a very clean slate. I'm stronger. Today, if my cost of funds, for instance, was let's say 7, tomorrow my cost of funds will come down to 6. So I will have the ability to compete with an SBI, with ICICI Bank or Axis for that matter. I can name only 3, 4 large institutions. Kotak is still some distance away when it comes to its size. So I can compete with them. I can also compete with the smaller players. So I will not be allowing the smaller players to come and eat into bits and pieces. So that is the biggest advantage these two will have. And then there are many other advantages. See, from a home loan customer's point of view, the loans should become cheaper. Whether they will become cheaper or not will also depend on the prevailing interest rates, and all those issues are there. But net, borrowing from an HDFC bank will be cheaper than actually borrowing from HDFC as of now or any given point in time, because the costs are different.
All right. So, I mean, the other, as far as the markets are concerned, shareholders are getting more shares for the HDFC stock. I mean, does this mean that they're excited? Is this exciting news for shareholders of HDFC?
Yeah, in a sense, if you are a long-term investor, yes. If you're a long-term investor, yes, because I mean, look at somebody who's holding both HDFC and HDFC Bank. Most funds, most investors, large investors, in fact, these days even retail investors, they hold all the 3, 4 institutions under the HDFC umbrella. Okay, so I'll focus on only the two, HDFC and HDFC Bank. Both have been giving phenomenal returns. They are like 15% fixed deposit rate. Every year I am guaranteed minimum 15% rate of return if I'd invested either in HDFC or in HDFC Bank or both. So very clearly, it's a very, very compelling situation where you cannot, as a long-term investor, ignore the benefits of all these things. So it will definitely be beneficial. And in the share swap ratio, if you are holding both or only HDFC, then you will get to hold the larger, stronger institution, which is preparing for the next 10 years or 20 years that we are looking at.
And finally, just to put this whole thing into perspective, we've seen some banks crumble in the recent past due to bad credits and various other reasons. So is this merger indicative of things getting better or worse, or does it need to be seen as a standalone development? What does it sort of signal for things to come?
You see, this very clearly is a standalone development, but compelled because of the economic environment that is economic environment and the changing technological upgradation that everybody is seeing. Now, it is a standalone in the context of all these developments. You got to be prepared. You have to be big. You have to be strong. You have to be clean, and you should be able to lend. Therefore, that is happening. But this does not mean that every other small bank or other big bank will go and do merger. There will be a wave of consolidation. This is a theory which is generally floated whenever there is a takeover or a merger that happens. In the past, I've never seen any merger followed by a series of 10 or 20 mergers. That doesn't happen. And in banking, it's even tougher. You can't do that. And most of the so-called smaller banks, which are takeover targets, I'm sure they are not good takeover targets. Maybe if somebody takes them over, they are actually bailout cases.
Okay. All right. Thank you so much, Mr. Swaminathan, for all those insights. Thank you so much. We hope to have you back in Federal soon.